thing this morning. It's to play you off against each other a little bit. Do you think that you're becoming more entrepreneurial like David or more institutional? And I'm wary about saying that. More institutional like Bill?
You're going to have to try harder, Damien, to get me to reply to that sort of comment. Look, we have a great deal of respect for both the other organisations represented here. We try and learn from what they do and do well. So I certainly wouldn't think of it as wanting to be not institutional if that's the way that some of the institutions are run.
And so in terms of your investment decisions, do you seek to get to select assets that may become institutionalised?
Yeah, absolutely.
Later?
It's very, if you have just a very simple risk-return graph going up, our job is to invest in those sectors that we think maybe are a little bit mispriced and need fixing. And a key part of the business plan day one before we even buy it is to say, if we fix it, can we chuck it down the risk curve to lower cost of capital investors, not necessarily REITs.
Okay, Bill, I fear I'm going to get in with both barrels now. The picture that I've been painting of 3 different investment strategies here, moving up and along the risk curve, is that something that you recognise, or do you see yourself more similar to David than perhaps I'm simplistically suggesting?
Yeah, so obviously we've got talented, dull. That's what we're saying.
I didn't use any of those words, and I didn't seek to imply that.
People would say to me, are you an institutional money manager? And I take issue with the word institutional because I think it has negative connotations. I think it implies constrained, overtly considering risk above all else and nothing else really matters. And if you were to say to someone, do you feel like being institutionalised? I wouldn't be particularly happy about that. Put me in there and throw away the key. I think I saw in Cullinan. See, IPD's got a lot to answer for here, really, because I grew up in this world of when suddenly IPD came out there and they measured the market, and everyone who was a fund manager got very excited, and particularly in the world where real estate in those days was seen as the poor cousin versus the other capital market asset classes. So real estate came of age, and this was all very exciting. But of course, what happened is all the unimaginative institutional fund managers thought, well, this is great, I can do benchmarking. So all they do is they take a position which is overtly market neutral because they think that's the best way to protect their arse, and actually that sort of behaviour I think has become prevalent. And really what you should say to a property fund manager is, have you got property skills and can you deliver above average outperformance? And if the answer to that question is no, then they shouldn't be paid fees for what they do. And
Bill, looking forward at your investment strategy, and if I can use the institution word, hopefully one last time, but meant in the spirit that you described it. We've talked for a long time about institutional interest in PRS. It seems that that's finally happening. Is that a big part of your future plans?
The thing that matters the most to me about the private renter sector is that you need to build to rent it, and you need to design and specify it in such a way that it is different from owner occupation. So if there are models out there that are turning owner occupation into rental to provide a rental stream, you know what, I'm not interested in that. What we will do is get very much involved upstream and the design process and provide, rather like the US model where it exists in a way, 100 and something units plus, you can manage them efficiently, you can generate income, there's ancillary income that you can produce. And really for London, I think that's an exciting opportunity that hasn't really yet been done here. So that's what excites me about it. But private rental sector...
And when does that begin for LNG?
Something we'll talk about in the not too distant future, I'm sure.
Okay, I asked on Twitter this morning, and I'll open it up to questions from the floor in just a moment, but a handful of questions came in on Twitter this morning. And David, I'll start with you. One from Anthony Slumbers. Do the panel really believe prime central London resi can keep going up and up?
Where we're particularly involved at the prime end of the market, we're developing a scheme opposite Buckingham Palace now that PC's just before Christmas. We've got a large site in Mayfair. We've got another mixed-use part residential site in Notting Hill. The prime end of the market, the supply demand is similarly completely out of whack. I mean, people are when we see the headlines about oversupply at the prime end of the market, we don't really see that. There are, at the very, very, very top of the pyramid, we think there's something like 50 to 100 apartments and houses being delivered per annum over the next 6 years, 50 to 100. In a market where, if you read the Knight Frank Wealth Report that came out last month, which is an amazingly good, concise, well-researched paper, the Knight Frank Wealth Report cited that there were 175,000 families around the world that they define as ultra high net worth, being worth 30 million US and above. And that's expected to more than double to 400,000 families over the next 6 to 8 years. Well, most of that new wealth that's being created in emerging markets and elsewhere will have London pretty close to the top of the shopping list.
But I think the headlines get grabbed by the very, very super prime end. That's the headline on the front of the Evening Standard. The real question is it possible to build roofs over people's heads in London that they can afford to live in? That's the real question. That's the volume question. That's the thing that matters a lot more to government. And that does take you in the direction, as it happens, I'm going to contradict myself now, that takes you in the direction of the private rented sector. Because that's the only way you're going to be able to get people living in sensibly specified accommodation. Yeah. Because clearly owner occupation is really becoming a stretch for more and more people who live and work around London.
And the affordable housing model is really stretched at these sorts of values. We were laughing at the definition of affordable housing when you look at the sorts of unit costs that we're being asked to put together. You think, is that really a sensible use of capital to be spending, if you include the land cost, $1 million to build these units and then let them at a small rate? Is that a really efficient use of what is another tax? Doesn't feel wholly sensible. So I think there are a whole bunch of things in this space that have to happen.
And most of those are in the government's gift.
I was just exactly, and you can draw your own conclusions for how that will play out.